Silent charts, loud lessons. My life in candles. I first met the invisible game on a winter morning that smelled of burnt coffee and fluorescent dust. The sand futures were flickering, half alive, and I, an eager novice wrapped in a hoodie 2 sizes too ambitious, had just shorted 5 contracts because a red candle looked angry enough. For 90 seconds price sank exactly the way I'd sketched it in the margins of my trading diary. My pulse matched every tick. 42 points later, I hit flatten and felt a bright, electric certainty spill through my veins. So this is mastery. But as the green digits faded from the blotter, a subtler sensation settled in. A low-frequency hum behind the ribs. It whispered that the candle had never cared about my trend line, and the money on my screen wasn't proof of brilliance. It was bait. I didn't know it yet, but the real contest, the one without timestamps or chart patterns, had already begun. It was a duel between my need for control and the market's talent for exposing it. That morning I believed I'd cracked some external code. Instead, I'd opened a door to a mirror maze where every candle reflected a side of me I'd never met. Greed, fear, vanity, resilience. The price chart became a diary I couldn't falsify, each bar a line of confession. What follows is not advice, only autobiography. A field report from the mental front lines. If you trade, you accept risk. If you keep listening, you'll meet mine. How one bright red candle taught me the market's deepest secret. You're never playing price. You're playing yourself. Chapter 1. The Spark. The first time I saw a candlestick chart I mistook it for an EKG. Green and red pulses marched across a black monitor in a dim classroom where a guest lecturer, an ex-hedge fund analyst with a scar on his left eyebrow, was trying to convince 20 finance majors that markets had personalities. Price is just biography in motion, he said, tapping the screen as if it might tap back. Most of my classmates pretended interest. I felt something inside me tilt, like a comp back finding north. That night I downloaded a free platform, pulled up Apple's intraday chart, and stared until the lines blurred. Around midnight a single candle stretched higher than the rest. An emerald skyscraper climbing into negative space. I clicked replay, watched it again, heart hitching each time the wick expanded. It felt illicit, like spying on a living thing as it exhaled money. The following week I funded a micro account. $500 scraped from tutoring calculus. And told myself it was tuition for a crash course no syllabus could match. I traded purely on feel. If a green bar looked strong, I bought. If a red bar looked mean, I sold. My first 3 attempts fizzled, losses so quick they barely registered. Then a small cap biotech announced FDA fast track status and the tape exploded. I bought near the open, thumb hovering over the mouse, and 30 minutes later closed for a $258 gain. Half my account in half an hour. The rush was narcotic. Cheeks flushed, scalp tingling. I paced my apartment counting beats like a boxer between rounds. No drugstore vitamin could match the jolt of instant relevance. I saw the candle. I pressed the button. The world paid me. I didn't just feel smart. I felt chosen. Over the next month I chased that feeling with the devotion of a pilgrim. Alarms went off at pre-market. Energy drinks crowded the desk. I traded anything that moved. Solar stocks, meme coins, penny miners. Sometimes I won, more often I didn't, but every trade fed the meter of sensation. I told friends I was refining my edge. But edge was an afterthought. What I really refined was my dependency on excitement. Boredom became intolerable. If 5 minutes passed without a breakout, I scrolled Twitter for tickers on fire. When nothing burned, I manufactured sparks, forcing entries so I could feel alive again. The breaking moment came on a quiet Thursday. I had shorted a mid-cap retailer on what I convinced myself was a topping wick. Volume was dying. The play should have taken hours. 10 minutes in, price drifted sideways. My legs started bouncing. I moved the stop closer to stay engaged. Another dull candle. I zoomed to the 1-minute time frame, searching for microdrama. When none appeared, I added a second, larger short because size would make it interesting. Almost on cue, the stock levitated, squeezing me 8% in 3 minutes. I flattened the position, account bruised, adrenaline washing into nausea. I shut the monitors, sat on the floor, and listened to my pulse drumming in my throat. In that space between heartbeats, a sentence arrived uninvited. You're not trading for profit. You're trading for pulse. The truth tasted metallic. I realized I'd confused edge, the repeatable intersection of math and market structure, with thrill, the unrepeated collision of boredom and impatience. Edge is probability measured over hundreds of events. Thrill is chemical, measured in milliseconds. Edge is scalable. Thrill is insatiable. Edge whispers. Wait. Thrill screams. Now. One builds equity curves. The other builds heartburn. I reopened the platform and pulled up every trade I'd made in the past 30 days. Whenever the entry note included words like felt, looked, exciting, I tagged it red. Whenever it referenced a pre-planned level, specific risk, or pattern, I tagged it green. The screen lit up like Christmas. Red dominated 22 trades. Green, only 4. The red column was net negative. The green, modestly positive. Data had outed the addiction. That evening, under a single desk lamp, I drafted 2 columns in a leather notebook. Thrill. Trades initiated during market speed scrolling. Size increased mid-trade. Stops adjusted on the fly. Emotional peak after entry. Edge. Trades logged pre-market. Size fixed at 0.5% of equity. Stop set at objective structure. Emotion stable before and after. My first new rule was brutally simple. If a setup produced noticeable excitement, elevated pulse, shoulder tension, the urge to boast, it went to the thrill column and was automatically disqualified. If it produced calm curiosity, it earned further review. The next morning I broke the rule once, caught myself mid-click, and closed the platform for the day. That felt like loss at the time, but looking back it was my first profitable decision. Practical takeaway. Write your own 2-column litmus test. One side lists the sensory markers of thrill. Restless scrolling, sweaty palms, time compression. The other lists the hallmarks of genuine edge. Predefined criteria, constant size, calculated stop. Keep the paper within reach. Each time you hover over the buy or sell button, glance at the columns. If your body is shouting, you're in the wrong column. Because the market doesn't pay excitement. It taxes it. And the bill always arrives with interest. Chapter 2. The Storm. A month after drafting my thrill versus edge columns, I convinced myself I had conquered impulse. 3 green weeks in a row will do that. I was back to trading 0.5% risk, logging setups the night before, ignoring Twitter flares. I even printed my equity curve and taped it to the fridge so I'd see discipline every time I stole almond milk. Then earnings season hit like a typhoon. It started with Stellar Cloud, a tech darling that had whispered guidance upgrades all quarter. My screen lit up pre-market. Contracts traded 5 times average volume, volatility index spiking. The thrill column whispered, danger, but ego barged in dressed as confidence. Relax. It said. You're prepared now. I plotted a breakout level at $62.10, set a stop at $60.60, and risked the standard 0.5%. When the bell rang, Stellar Cloud shot through $62.10 and flirted with $63 within minutes. My heart hopped but stayed caged. So far, so good. Then the candles paused. 3 narrow bodies inching sideways. I glimpsed level 2 and felt it. The old itch. Add size, ride the real move. I doubled the position, convincing myself I was scaling in on confirmation. Scaling, sure. But not on plan. The stop stayed at $60.60, which meant real risk had just doubled too. Stellar Cloud printed a 4th tiny candle. The tape felt coiled, and I pictured the headline. Disciplined trader catches monster breakout. A friend pinged me for lunch. I typed, busy printing money, then muted notifications. The 5th candle arrived, not upward but down. Hard. In 20 seconds price knifed from $62.90 to $61.70. My heart sprinted. Instead of exiting on the doubled risk, I slid the stop lower. Give it room. The price sliced that line as if it were vapor. Loss. 1.2 are in under 4 minutes. It stung, but the bigger wound was bruised ego. I'm not wrong, the market's wrong. Revenge mode activated. I shorted the very next candle, certain a flush was coming. 2 minutes later Stellar Cloud spiked back to $63.30 on a rumor of blowout guidance in the conference call. Stop. Loss. Again. I stared at the blotter. 2.6 are on a day I'd planned to risk half an hour. The storm had arrived, and discipline's umbrella was flipping inside out. My mentor Lucia chose that moment to check in. Charts loud today? Her message read. I replied with a half-truth. Volatile, staying nimble. She video called. I almost declined. Answered anyway. Camera on, she saw the sweat in the blinking red panel. She asked one question. What's your max loss today? I hadn't written one. The storm tore it from my mind at dawn. I mumbled something about adapting to volatility. Lucia shook her head slowly, then held up a yellow index card. 1 hour day in thick marker. No card, no trades. she said, and ended the call. Humiliation washed over me, but her index card glowed in memory like a lighthouse. I closed the platform, printed my statement, and circled the day's damage. 2.6 Then I opened my notebook and drafted my own card. Daily circuit breaker. 1 beneath it, another line. Timer rule. 15-minute break after every loss. I taped the card beside the monitor where impulse could not avoid it. The next session opened choppy. I longed to earn redemption, but the card glared. First trade. Small win. Second trade. 0.4 The drawdown alarm flashed yellow. My finger hovered over the mouse, ready to chase a third entry. Instead, I set the phone timer for 15 minutes, walked to the balcony, counted passing buses. When the timer buzzed, the itch had dulled. I skipped the next marginal setup. It would have lost. 2 weeks later. Not glamorous weeks, just quiet ones. The account had recouped half the storm loss, but more important, no single day pierced. 1 The circuit breaker and timer were now as reflexive as checking spread before clicking. Practical takeaway. Print your max loss number. Large, ugly, undeniable. And tape it to your screen. Beneath it, write a mandatory break interval. When loss hits the limit or the timer buzzes, stop trading. Storms still come, but they can't capsize a boat that drops sail and waits. Only after experiencing the calm that followed did I realize. Boredom hadn't been my enemy. It was the eye of the storm, the place decisions can breathe. But to stay there I needed more than rules. I needed stillness to become habit. That journey began where the storm ended. Chapter 3. The Stillness. The Monday after Lucia's index card intervention, I sat in front of a silent year USD chart that looked as flat as a library carpet. Nothing moved, nothing beckoned. Old me would have slammed click through watch lists or opened Twitter for thrills, but the card on my monitor. Daily circuit breaker. 1 stared back like an unsmiling coach. I decided boredom itself would become my next trade. At 8:02 a.m. I set a stopwatch to see how long I could remain motionless, eyes on the 15-minute candles, breathing through my nose. The first 3 minutes felt like eternity. I noticed a phantom itch in my palms. By minute 5 my shoulders relaxed. Minute 9 brought a curious thought. So this is what the market looks like when it's not baiting me. At minute 10, a modest inside bar printed. My written plan called this a non-event. Still, my heartbeat sped. I whispered. Edge, not thrill. And looked at the timer. 12 minutes. I promised myself 20. The moment passed. Something subtle shifted in that 20-minute vigil. I realized candle patterns weren't invitations. They were footprints. The real event was my reaction to the footprints. The calmer I stayed, the clearer the tracks appeared. For the next month I treated stillness like weight training. 3 sessions a day, 20 minutes each, screen on, hands off the mouse, notebook open only for sensations. I logged when my breathing grew shallow, when my mind wandered to social media, when a candle pierced a tiny range and adrenaline tickled my ribs. Halfway through week 3, I caught a clean mean reversion setup on USD JPY. Entry plan the night before. Short at 146.30, stop 146.80, target 145.55. 25 minutes passed after entry. Zero drama, zero urge to meddle. And price tag target for a cool 1 I closed the chart and waited for my pulse to spike. It didn't. Profit felt like scratching an itch you almost forgot you had. Pleasant, not intoxicating. That evening I wrote a line that stays taped to the desk. Boredom is the blank page where edge can write. When markets slowed, I no longer chased excitement. I practiced reading stillness. Strangely, that made true opportunities louder. Like a whisper in a quiet room, valid setup stood out. My daily stats reflected the shift. Average trades per session dropped from 7 to 3. Average or multiple per winner nudged up. Variance of returns down by nearly half. But the real reward was intangible. I could shut the platform at the high of day or after taking a planned loss and feel the same internal temperature. Steady 37 degrees Celsius. Lucia called this psychological flatline trader's pulse. When price can't spike your heart, you're finally in the game. She told me. I understood. Stillness wasn't absence. It was mastery in disguise. I came to trading for fireworks, stayed for ego, and nearly quit in a storm of impulse. Candles taught me the lessons classrooms never could. That excitement is rent you pay to the market, that storms test whether your rules have anchors, and that stillness. Boring, steady stillness. Is where probability finally speaks in a clear voice. If the invisible game has a scoreboard, it isn't dollars. It's disciplined decisions made one breath at a time. Today my index card remains. Daily circuit breaker. 1 hour. The timer still buzzes after a loss. And each morning I start with 20 minutes of watching nothing happen, letting boredom sandpaper the edges of impatience. The candles still flicker red and green, but I no longer chase their color. I read their footprints, place my bets, and let quiet do the heavy lifting. The invisible opponent. My own need to be right, to feel alive. Still whispers, but its voice is softer now, lost in the hush I've learned to trust. And that's my life in candles. Spark, storm, stillness. If you hear your own story between those lines, tape an index card beside your screen tonight. Give boredom a try tomorrow. You might discover, as I did, that the calmest trades often leave the deepest equity footprints. And the smallest scars on your heart. Money is made by sitting, not trading. Jesse Livermore's line cuts through a century of market noise, and it's the perfect epilogue to this story. All the spark and storm are just prelude. The real compounder is the quiet hour when you do absolutely nothing because the probabilities aren't there. Master that stillness and the invisible game tilts, quietly, in your favor.